All right, so let's just get started, I think. All right, so today's topic, as I said before, is on money management. Right, I'm from Adverse Fortune Group, and I'll be hosting this webinar for today. All right, so I prefer to not use any slides, so I'll just press everything. If you all don't mind me. All right, so what is money management exactly? Right, so money management is all about controlling your risk, right? Your take profit, your stop loss, and how to calculate them, right? So if you're a risk averse person, right, you will naturally try to minimize your risk taking, right? Maybe so if you have a portfolio of let's just say $5,000, right? So if you're a risk adverse person, right, you will most probably do a stop loss at about 2-5%. I would say that is a very good stop loss indicator, right? If you are more risk loving or more risk taking, right, you can do a 10%, 10% to 15%, right? I will never advise a person to go 50% or 100% all in, because no matter how sure you are, because there might be cases in which the trade might go wrong. All right, so let's go next slide. I just will press. All right, so I'm going to talk about management. So right, it's the art of limiting the risk of portfolio while maximizing its return. Right. So I have to say that even let's just say that you have a 50% chance of going right or wrong, right? So there's no sure trade in this world, right? There's all about probability, right? So you might be a 50-50 or might be a 70-30% if you're a very experienced trader. So let's just say 50-50%. Even if you only get half right? If you know how to limit your risk, right, and take control of your own portfolio, right, you will do fine. You will still have a profit. So I would say that this is one of the most basic, as I stressed before, most basic fundamentals of trading. Knowing when to stop loss, knowing when to take profit, and such like that. Right. So I want to add that if you guys have any questions, just feel free to stop me. Right. I will be sure to answer your questions. Right. If there are questions which I'm not sure of, right, I'll be here for the next webinar. I will get back to you, or I'll email you if there are any answers in which need me to actually take a longer time to reply. Okay. So studies have shown that 90% of the variance in trading performance can directly attribute to it. Right, so all about stop loss and take profit. Even hedge funds, right? You might say that hedge funds have deep pockets, but they also have how do I say this? All right, so they actually also a very risk controlling portfolio, right? For example, they might not go beyond 20% of their portfolio. They will get out of the trade, right? Wait for a better opportunity before going in again. Okay, next slide. All right, so I'm going to tell you about what consists of, So what consists of a rich money management strategy, right? So first, you need to find a stop loss. So where's your stop loss normally placed at? It's normally at a very good support or resistance for technical analysis, right? For a fundamental analysis, I would say that normally people actually decide on when they want to put their stop loss, right? Some put 5%, some put 10%, some put 15%, right? I'll say that if you combine both technical and fundamental analysis, right, you'll be a better trader, right? So, for example, let's just say Apple is having what's it called? All right, every year they have this annual Apple event, right? So they will release and show new products, right? So naturally, there are people who are speculating on the share prices, right? If the event goes very successfully, right? So most probably the share price will rise. However, if the event is to underperform, the share price will decrease, right? So you will see that there'll be a setup on a chart, right? Then you can decide on whether to go in on your trade or not, right? So I would normally say that if you want to put your stop loss, right, after the event, you have to decide on maybe I'll just give you an example, right? So let's just say Apple is $127 right now, right before the event. After the event, it might go down to 126 or 125, right? Or maybe it will go down more, right? If you are shorting it because you think that the event will underperform, you might want to put your stop loss at about 127.5 because you are so sure that it will go down, but it didn't go down, it went up, right? So that's the case of a very good, take profit risk management strategy, right? So yeah, so this is what I covered just now. The specific amount of money you want to risk in each trade. Maybe some of you have a bigger portfolio of 10,000. You might want to risk about $200. Some people play with very small money. It's okay. I start out with very small money too. I'm still playing with with different portfolios. So I have a small money portfolio and a bigger money portfolio. Right? It really depends on you. I would suggest to start out small, right? Regardless of whatever kind of trade you're doing, currency, forex, crypto, right? It's the in thing now, or shares or whatever, right? So, and the maximum amount of risk over a given period, right? So some people hold shares for 1 week, some people hold shares for 1 year, right? I would say that if you are a technical trader, you would not want to hold your positions at a very long over a long period of time, right? If you are a fundamentals trader, technically you hold a longer period of time because you believe, right, your financials, right, backing the company, right, will always be right. So if it's undervalued, it will eventually be to its valuation, right? That's for fundamental trading. For technical trading, it's all about charts, right? So charts, if you guys have any questions about charts or stuff or whatever analysis, right, you want me to do, or fundamentals or technicals, right, you guys can ask me once I complete all these slides. I'm just going to press. Oh, sorry. Right. So, what amount of risk will you be willing to take? Right. I'll say that for a successful trader, you should not risk 1 to 3% of total equity in one trade. But I would say that it really depends on risk tolerance. If you actually think that your trade will go smoothly, right? And if you are a risk-loving person, you might try to go for a higher percentage. But I always say cap at 10%, right? I think 10% is already a lot of portfolio. If you can just cap it at 10%, no matter how risk-loving you are, right? So, oh yeah, I want to add one more thing. If let's just say you fail a few amounts of trade, right? So for example, if you fail 3 trades in 1 day, I would suggest that you might want to take a break, right? It's not because your strategy is failing, right? There's some times in which the market can be very choppy, right? For example, gold market yesterday went from 1750 to 1749 to 1770 within a matter of minutes, right? So this market is a bit, unpredictable, right? So you might want to be careful, right? If you fail 3 times, I would suggest just take a break, right? Do not worry about strategy, because sometimes it's just like that. The market is very unpredictable, right? Large news can affect it anytime. Right, so I also want to touch on a bit of psychology, right? Trading psychology. Sometimes I understand that if you fail constantly, right, you want to get back to the market and try to earn it all back. All right, I would say that it never works, right? If you lose, you're just gonna lose everything. So I would say that you should try to actually control your emotions, right? Don't be too emotional on your money, right? If you think that 1 to 3% is too much to risk, right, per trade, you can go a bit lower, right? You might go to a digit or stop loss in which you can feel that it's very comfortable, right? Losing it doesn't mean much to you. Yeah, so as a single, 1 trade should not matter. All right, just gonna press the slide. I'm sorry. Yeah, so risk is really your own personal preference, right? Some people, as I said before, prefer to hold your trades over a longer period of time, right? And you must see how much money you have. Imagine if you have only like maybe $100 and then you want to hold your trade over a very long period of time, right? The longer the trade, right, the more likely that it'll be more volatile because you're holding it longer, right? But there'll be so it means that you must have a larger amount of capital to hold your trade longer, right? Especially if you're on leverage, you might get margin called and stuff like that. So you should be more careful if you are playing with a small amount of money, right? And really depends on personality, right? If you are, depends on whatever risk loving or risk taker or risk averse you are. All right, I'm going to go to the next slide. Sorry, that's pressing everything so that it's very easier for me to explain all this. All right, so I'm going to talk about it. Okay, so I'm going to talk about risk-reward trade-off. Okay, so what is risk-reward trade-off exactly? Right, so for example, if you're going to risk $1,000 of a portfolio, right, you might want to get 1.5K, right? But if you lose maybe $100, just an example, all right, lose $900, right? So $100 loss to a $600 profit, right? To a $500 profit, right? I think it's quite worth it. It's a 1 to 5 ratio. So some people, you know, obviously if you risk more, if you have this kind of large ratio, right, it's very more risky because you're actually holding a trade for a longer period of time. You're waiting for it to drop or go higher, right? Larger ratio. So obviously this will be more risky. If you are more conservative, right, you'll play the very, very small movements in the market. For example, maybe a $5 to $10 movement for maybe gold, or maybe a $1 to $2, a few cents or a few pips, right, for currency, for Forex. So it really depends on you, right? It depends on how, as a stress, right, how risk loving you are. So if you are, I would say that I'm more of a more aggressive trader, right? I'll be going for the larger win-loss ratio. Not win-loss ratio, I mean the profit and the loss ratio. So I'll suggest that if you start off, right, you might want to go for the more conservative one, because if in anything, right, just in case, your analysis might not be 100%, right, might not be even a 50%, right? So if you are wrong, you can instantly correct that. You don't have to worry so much about it. All right, I'm going to go next. If there's any questions, just feel free to, you know, ask any questions. I'll be sure to reply you. All right, so this is some of the ratios or some of the percentage in which is telling you to how you classify yourself, right? Maybe I want to ask a question in which what do you guys think best represents you? Are you a conservative or moderate or aggressive? If I can get some answers, it would be good. Conservative for a start. Yeah, I would say that you should start conservative. So 0.1 to 1.5%, right? It's a very good start off point. Okay, but you have to be very, very sure of your analysis if that's the case, because anything will stop you out. So, right. So most of you all are beginners in trading, is it? All right, sounds great. Trading is pretty fun, but sometimes you may make a loss, but you must really, you know, just try again. Right, start off with small sums of money and then try again. Yeah. All right, so I'm going to go to the next. All right, so I'm going to go to position sizing. So in other words, for example, right, it's the amount of equity invested in a single trade. Right, for example, some people like to invest 100,000 in currency, in maybe in euro dollar, right? So you're maybe long euro, right? Yeah, you think that USD will weaken, so you're long euro, right? Expecting euro to rise. some people just throw in 100,000, right? I think we are more of a, I don't think we have the amount of money actually, so I think we are more of a lesser volume person or lesser position person, and we should actually try to always be safe, right, when deciding our volume, right, deciding our position, or what position to take in, right? For example, shares, we might talk about 100 lots or one lot, right, which is about 1,000 shares if I'm not wrong, right? So you really need to, but for starters, we always go with less than 100 shares lah. All right, let's skip this. All right, I'm going to give you guys an example on shares, right? Oops, I'm sorry, I overshot. All right, so an example of shares is probably you see that, oh wow, the chart is showing a double bottom. So a double bottom is a bullish reversal pattern, right? So it shows that the share price will go up right after. So you're going at entry price at 150, right? So you're going to set your stop loss where? At the bottom of the double bottom action, right? Chart pattern. So maybe this is a $10 difference. So you're going to put it there. Then you go, if your trade plays out, right, it should go up, right, and you'll get a profit. So you must know how to calculate the amount of shares and how you calculate your stop loss and stuff like that, right? So for example, right, 10% of $1,000 in a single trade is about $100. So you're willing to lose $100 for this trade. We'll go next. I think I can skip this. Right, so this one is playing a bearish reversal pattern, a double top. A double top is normally shows that the price will go down right after, right? So yeah, so you're just calculating the amount of money you raise. So 10 shares times $10 loss is $100, right? Please don't miscalculate and say that it's $10. I know there are some mistakes like that, right? When you first start, you forget the position size and the volume and the amount of money you actually lost per pip, right? So please don't make this kind of mistakes, right? For starters. All right, for Forex, you shouldn't play. My suggestion for you, if you just start out, right, is to play just a few pips. So instead of playing a few cents, I know you guys love large movements, right? Large profit taking. But I would say that play the few pips, right? Don't leave your trade overnight. I cannot stress that enough. If you are actually just starting, right, you want to make sure that the play you are actually expecting is going up or down, right? For example, up, maybe a few pips, down maybe a few pips, and then you should close your position. Why? Because you might read the chart wrong, right? You might do a wrong analysis, and then it might actually stop you out. So the best for you to start this is actually to confirm, the direction for your trade, right? As many times as possible before you go on to bigger and better things. All right, going to go next slide. Oops. This is just a repeat, so I won't actually try to elaborate on it again. Right. All right, but I want to show you about the chart. I'm sorry. So the chart shows a double top, as I said before, is a bearish reversal pattern, right? So you should put your stop loss at the top of the chart, right? It's a graphical swing high right there, right? If there's no other indicators, it's a graphical swing high. So you should put your stop loss there, right? You're actually shorting it, so you actually believe that it will go down. So you should put your entry price right at the double top, the end of the support of the double top, right? So it shows that if it actually goes down, you can be sure that your trade direction is right? You can continue to play on it. But if it goes up and hit your stop loss at the top of your double top, right, then it's okay, you can try again next time. It'll be better, right? It's all about a probability, right? Even if you see a double top, it may be a bearish reversal pattern, but it may not always be right, right? It's just a high probability of it going down. All right. All right, so in this next section, I'll be talking about risk-reward ratios. As I said earlier, right? A very good one is maybe 1 to 2, right? I always advise against taking 1 to 0.5, right? For example, 1 to half a loss ratio. So it means that, let's just say you risk $20, you put your stop loss at maybe you at $5 mark, right? So it's about $15 you put your stop loss, right? Then after that, you decide on, okay, I think that this thing is going up, right? So it's going to 17.5, right? But then it's a half a loss ratio. So you're losing 1 to 2 in terms of loss. So I would suggest going against it. I suggest do not play that, right? Always go for the 1 to 2, right? You're going to earn $5, you lose 2.5 instead of losing 5 and earning 2.5. If you get what I mean. I'm going to the next. All right, so this is what I said earlier, right? I will just go on it again because I believe it's quite important for starters to decide on your risk-reward ratio, right? Don't take trades in which you are too much loss compared to your profits. All right, so the risk-to-reward ratio shows how much money you're risking versus how much money you can earn, potentially earn, right? So in order to attain the risk-reward ratio, right, both risk and profit potential of trade must be defined. So you must decide on the stop loss and the profit taking. Okay, there are some cases in which where your profit taking, right, you might just, all right, for example, you're shorting it, right? Let's just say you put at 1.2, okay? But it goes all the way down. You're like, wow, you're earning lots, so you are not willing to let it go, right? I would suggest that for starters, you should actually, if let's just say your stop loss is your take profit is at 1.2, right? So you just take it at 1.2, right? For starters, don't let it go all the way down because there might be a reversal and it might actually work against you. So it might actually go above 1.2 in the end. So you must actually be very, very disciplined in taking a profits and stopping a loss. Oh yeah, and one more thing to add is that if let's just say you're playing a day-to-day trading or hour-to-hour trading, right? So you always put your stop loss and your take profit nearer, right? Compared to maybe you play day by day, right? Or maybe play 3 days by 3 days, right? So for example, if you play 3 days by 3 days, your take profit and stop loss, right, can be further apart, right? Because right, the price action need more time to play out. But if you are playing it nearer, right, maybe a day-to-day thing or hour-to-hour thing, but you want it to be as close as possible, right? Because you want the action to be played out as fast as possible, so you can take out your profit and stopping your loss. All right. Okay. This one. All right. I also want to add that there are some cases in which when you are a rookie trader, right, there are cases in which your stop loss is at, for example, it's at 1.5, right? You're shorting the stock. The stop loss at 1.5. Then you go to 1.52. Then you're like, oh, I think it will go down eventually, right? So you're going to increase your stop loss position to 1.6. Okay, there are many cases in which I did that too in the past. So I would say that you should, if your stop loss is 1.5, just keep it at 1.5. If you're sure that there's a reasoning behind your stop loss being at 1.5, there's definitely a reason why it is at 1.5. Like maybe there's a resistance or there's a support level or there's a horizontal overlap support in which you actually determine that price already. So please don't change it. Okay. Okay, I'm just gonna go through this fast. If you guys want me to actually actually want me to go through that slide particularly, you can just tell me. I can just go back and actually go through it. Okay, for a risk-reward ratio, 1 to 1, 1.5, and 1 to 2 is all acceptable, right? For starters, you should do 1 to 1 to 1 to 1.5. Okay. Okay, these are all examples of your risk-reward ratio. All right, so expectancy is all about your math, right? It's all about calculating the loss, the average wins, right? So as I said, right, there's no 100% sure trade, right? There are days in which you will lose. It's perfectly fine, right? There's no problem with your trading strategies, as I stressed earlier, right? You just have to keep track of them. But as long as more green days than red days, I think you are doing fine. I think you're doing great actually, because there are people who actually have more red days than green days. Most of them actually. Right, so this is the probability of green and red days, and maybe if there are problems in which the probability in which your red days is more than green days consistently, right, you might want to change your trading strategy, right, or maybe tweak something a bit, then something wrong somewhere. Wait a minute, I think my slide got a bit of problem. Sorry, my slide got a bit of technical problems. Give me a second and we'll be fine. All right, for starters, for beginning traders, I would say that you want to keep a trading journal, right? So what's a trading journal exactly? So a trading journal is something in which you put your entry position, right? Then you put reasons of entry, right? So why do you decide to enter this position? Then you might want to put your stop loss and your take profit position, right? Then if your trade play out, then it's fantastic. Your reasons is right. If your trade don't play out, then obviously there are reasons to which your trade don't play out, right? It might be the market, but most probably is your trading strategy. So you might want to keep a track, right? Every day you want to calculate the green and the reds, right? The reds means that you actually lost, right? And the greens means that you actually trade in the right direction, right? So after that, you can calculate the probability every day, right? And eventually you'll know your strategy work. If your strategy don't work, right, you can tweak your strategy at any time. All right. All right, this is one of the most important. I would say that this is psychological trading, right? Some people use emotions to trade. And I'll say that as a trader, you have to be logical, right? Don't rely on any emotions, right? If you lose, it's fine. Okay. As I stressed earlier, there are cases in which, the people keep changing their take profit and stop loss level, and eventually they lost. So it was green. It was a green trade. It means that you won. But eventually, because you keep changing your stop loss and your take profit position, so it reverse and then you lose. There are many cases like that. So you must always believe in your position, believe in your trading strategy, right? And also adapt to it, right? If you fail 3 times, as I stressed earlier, I always want to stress this: if you fail 3 times in a day, right, consecutively, then maybe you should stop trading for a day. Maybe it's just the market, right? So you shouldn't harp on it too much, right? Try again the next day. Okay, please don't do a revenge trading where you lose, you want to win more, you want to win everything back. This is not gambling. All right, so if you guys have any questions, feel free to ask on fundamental or technical analysis, right? I can be here to do it. If there's any trading questions, right, regarding risks, you also can ask me, right? Anything at all. Okay, hold on for a minute while I prepare some stuff. Okay. Hi guys, I'm back. So I saw a question regarding the oil risk reward. I will do it later. Right, and I also saw a $40 ultra low account position size reward. Okay, I would say $40 is a very low money to play around with. Okay. For $40, right, I would suggest if you play Forex or you play commodities, I'll suggest the 0.02 to 0.03 lot because I think it's very safe, right? So it's a very good place to start with. I think so did I answer your question? Nasima. Am I right? I'm sorry if I pronounced your name wrongly, alright? Alright, sure, I'm going to show oil. Okay, I'll say that oil is currently on a bullish trend, right? It has been for quite a few. Okay, so I always suggest a top-down analysis, right? So we'll start with weekly first. So what you want to do when you see weekly, you want to find your key support levels and key resistance level. Okay, I might not be 100% accurate because I'm just eyeballing it right now. So I'll say that your key support level is probably here. That's money. Sorry, my mouse is a bit bad, so I'm going to do it very slow. All right, so this is the support level. I'll put it as green. All right, then for now, I'll say my resistance is here. So if you're asking me about the reward ratio, are you shorting or are you long it? Or have you not decided yet? Yoke. Okay, so I'm going to put my resistance as red. Not decided yet. All right. So you can see that it just go up from its key support level right here at 6.6764.4, right? I'm just eyeballing it, so it might not be 100% accurate, right? So after that, you might want to go to daily. All right, so what's top-down analysis is from the bigger time frame to a lower time frame. Okay, so from daily, you will find I'll find good one. I'll say here is okay. Pressing mode. Right. Now I'll go my daily charts. Okay, I saw a very, very clear support level right here in the 4-hour chart, right? So if the price is going down, right, it'll be around here. If the price is going up, so I'm going to draw a trend line here. Sorry, my green arrow will be ugly. Right, so if you are shorting it, for example, right, you want to put your stop loss at about 7834.2, very, very safe, right? If it breaks 7834.2, it's going to go up, right? It's going to retest. If it fail, right, it's going to go up to the second resistance. So I'm going to put maybe slightly higher bid at maybe 756.4 or something, right, just to be safer with my stop loss. And then I can put my take profit here at 738.2, which I say might be a bit far. If you want to be more safe, you can put it here. Yeah. Which is another support level, right? So if you want to do it with your ascending trend line, you can put it here. Okay, so your risk reward ratio is very high. Okay, so another thing you can take note of is probably your stochastic, right? It's showing a very key resistance area. So it's approaching key resistance area, so you might actually drop down. All right. Is it good for you? Or do you need a further explanation? Yo. All right. Any more questions? I can do dollar franc, right, as an example. Okay, I actually did it already. So you always do daily, weekly, daily to 4 hour. Okay, if you're playing a very smaller time frame, you can play 4 hour, 1 hour to 15 minutes. Okay, even smaller, you know, the 3, maybe you can play 1 hour, 15 minutes to maybe like 5 minutes. It's okay too. Okay, so this is for weekly, right? You can see that we are actually highlight the resistance level and the support level. And this is for daily, right? So where's your stop loss, where's your pivot, and where's your take profit? You can see that this ratio is actually 2 to 1. Ratio is actually 2 to 1, right? A very good ratio. So you can actually play this. Okay, then you can see that there's a ascending trend line, right, touching the bottom of the candlesticks. Okay, so you can see that this is a stop loss and pivot, right? So what does a pivot means? It means that it might actually go up from here or go down from there. You guys actually use Fibonacci retracement or extension or projection, right? So Fibonacci helps you to show that your support and your resistance line is actually very strong. So if you actually go past the Fibonacci, right, it most probably will go to the next resistance or support. All right, so I'm going to show you the 4-hour chart, right? So what you must take note is about the change of price, the price movements, right? And your indicators. Indicators, I always say that it's not as important compared to the rest. I would say that price action is the most important, you know, when looking for charts. About anything at all, about risk management or anything. And you want to add on that the indicator also shows that it's actually going to bounce off. So I think it's going up. Most probably it's going up. But I have to add that everything is just my point of view, right? If the trade goes wrong, I hope your stop loss is in place. Nothing else, no questions. How about I do another chart? I always do gold. All right, so let's do this chart to show you. You guys have no questions on fundamentals, right? Fundamentals actually affect your trade a lot, especially macro news, right? Even the smallest news affect the market. All right, so for this, I see a all right, I saw a support level here, right? As I said, I'm just eyeballing it, so I'm not 100% accurate. Okay, so I see yes and do. Okay, I refer to TA because FA give me mixedness. All right, so TA and FA, there's people who says that you know, sometimes TA and FA, you know, it works doesn't work together very well. Right? I beg to differ, okay? Because TA actually gives you a very, very short term, a shorter term signal, right? But a longer term signal, you always have to refer to FA. For example, valuation of a company will never change. A valuation of Apple will never change, right? Apple is a very valuable company, so the valuation is always there. But for a TA, right, there might be chances that price actually goes down, goes below the valuation, right? So FA, for fundamental analysis, right, you will expect the price to go up. And I believe that sometimes the chart movement may show a temporarily downwards trend, but eventually it will go up to its valuation. So that's how it works together. All right. All right, so I'm going to show you a support here. Then I'm going to do a resistance, right? A resistance at a properly graphical swing high here for weekly. Right, I'll do it here. All right, then for daily, you want to go, as I said, top-down analysis. Right, for daily, I will show you about some resistance. All right, I see one here at 1731 because it's actually overlapping resistance area. Are there no more questions? Anytime you guys can stop me. Okay, then I'm going to do a support. Where should I put my support? There's one overlapping here at 1908. This. Okay. Now go to 4-hour chart. All right, 4-hour charts is something I'm always playing with. So I see one here. Yesterday price actually went to 17449, if I remember correctly. 1748. Right, then it went to 1770. Right, so it was here. You see one here? Right, if I'm going to trade this, I'll normally do 4 hours, 1 hour, 15 minutes. Or daily 4 hours, 1 hour. Because gold is very volatile, right? You don't want to be caught holding it back. I see one here also. So there are multiple strong resistance, right? I'll expect it to go down for today. Temporarily at least, right? It will go down. This gets me about regarding trading. All right, I saw 1778. No. Eight is my Fibonacci. That's just stochastic. All right, so what is stochastic exactly? Second, I prepare something. Okay, so for stochastic first, right? Stochastics, I won't tell you how does it work and not how does it. I mean, how did it come about? I'll just tell you how does it work. Okay. So for stochastic, normally upper and lower band, right? Why? Because if you use the upper and lower band, what it shows that there'll be it's harder to find the resistance and the support level. Okay, I'll go through one by one. So give me a second, huh? Okay, so off. Wait, pardon me. Where's my resistance? KND. All right. So, for example, right now, where's my line? Okay. So right now you can see that is at resistance level, right? So most probably the price will go down for short term. Why? Because it's a very strong resistance level. You can just draw it like that, right? ascending trend line. He's touching a trend line right now. So it might go down. Is that do you understand? And then you see that there's a support level here, right? So let's just say if stochastic were to go all the way down, right? I would say that this is your oversold territory, right? So if stochastic go all the way down, okay, this is a very strong support level, you can see. Okay, I'll say that some people use stochastic, the most basic use is just, oversold, overbought, right? But I would say that the best use of it is actually to find the resistance and support level, just like you find in the chart. Then you play off it, right? If it's reached a resistance level, right, it may drop down, right? If you reach support level, it might bounce up. Okay? So this was stochastic. So is it okay, yo? All right, so this is Luis. I'll go through Ichimoku. Okay, so for Ichimoku, right? Let me show you the cloud. Do you know how it works? Like, I don't need to explain how it came about, right? I just explain how it works. Is it fine with you? Because I don't really have much time. All right. So I always shows that now it's in the cloud. So right, the thicker the cloud, it means that it's higher resistance, right? So it shows that now the price is currently above the cloud, right? And then there's the cloud is relatively thick, so it shows that the resistance is pretty high, right? There's a possibility of it going down, right? But the thing is that this converger line and this baseline, right? The blue line is above the red line, so it shows bullish momentum, right? But there are sometimes you need, okay, Ichimoku clouds, I would suggest that if you want to use it, right, you want to all stars to align, okay? First, if you want it to go down, you need to see red clouds. Then you need to see the thickness of the clouds, right? If the thickness of the cloud is very thick, right, so it means resistance is very high, right? And then you want to see this line, conversion and baseline, right? The red and the blue line, right? The red line should be above the blue line. Then you can say that, it's showing bearish momentum, okay? Or do you want me to explain further? Okay, let me show you another one. Luis. Do you need me to explain further? All right, so for example, for this, right, you can see that the green clouds is very thick, right? So it's showing bullish momentum. Why? Because the support is very strong, right? It's trading above the clouds, right? So you can expect, and the blue line, right, it's above the red line here. So if I'm the person who's going for a trade, right, I'll see all this, right, and this see blue line above red line, green clouds and very thick clouds. I'll go in for the trade. I'll write this all the way up. When the red line cross the blue line, right, I will leave the trade. Is it a clearer picture? Luis? Sorry, I might pronounce your name wrongly as I said. Okay, for Osman. Okay, you want to show divergence. Give me a second, huh? Yeah, I need some time to find an example, so give me a second. So I'm going to answer for the divergence question, right? There's bearish and bullish divergence. I found one bearish divergence right here, right? So what is bearish divergence? Sorry, I'm going to adjust my chart nicely for you to see. Right, so in the chart, it shows higher high. But in the stochastic, it shows lower low, lower high. Yeah. So it means that there's a difference. The price might go down. So as you see, the price, you caught the price down, right? To the oversold, as I put the quote, oversold. Right, it's at the support level here. Is it okay, Asman? This is a bearish divergence. Okay. All right. So you think gold is it's a good time to short? I'll say that, I mean, if it went to a graphical swing high of 1770 yesterday, right? So if you want to short it, you can, right? But I'll say that there's a unemployment, a labor report coming out, right? So if the labor report shows that high unemployment, right, high inflation, low growth, gold is going to go up. Okay, so I'll suggest that you should be careful, right? You can trade for a day or maybe 3 days, right? But when Thursday comes, just leave your trade. Don't trade into news. It's a very bad idea. I think you can short it if you want to. Now it's what price? But maybe you want to wait for a little while before you consider that. Maybe you want to wait for it to go back to its graphical swing high of 1770. Yeah. Is it okay, Luis? Any other questions? I'm sorry, I have to keep muting my mic because there's a bit of tanker problems here and there. All right. Okay, so back to gold. Right, so graphical swing high here. Then I'll put this here. 1758 is a very good support point. It has been bouncing up and down the area actually. Then there's one at 17492. Right, a very, very strong support. Didn't manage to break through. That's why it went up to its resistance. Okay. What was 1759 already? Any other questions? If you guys have any feedback, you also can tell me for this lesson because this is my first webinar. So I would appreciate any kind of feedback. If you guys need a clear explanation on stuff, right, I'll be sure to keep it to mind and then improve on it next time. Anyway, Louis, 1759, I think don't enter position for 1759 because it might be a bit risky, right? The play is to 1758, right, for short term, right? Obviously, you can play to 1749, but that if it breaks 1758 support. Yeah. All right, that's a great idea, actually. Okay, for trading, right, I would say that you want to take, the trade in which it shows, the most amount of stars aligned. So for example, if there's one star aligned, maybe you just go down from its resistance level, you might not want to trade it, right? So maybe you want something to support it. For example, if you use EMA, right? Maybe you use 20 EMA or natural moving average, right? You want the price level to go below, to close below its EMA, and it comes from a resistance level. Then you might want to have an entry to short, right? So you must have multiple stars aligning. Don't go for one single indicator or one single price action then you go in. It might be wrong, right? At least if you have multiple indicators indicating a bearish or bullish momentum, right, you can be more sure of yourself. All right, so this is the end of my webinar. If there's any questions, right, you can come to my next webinar, I guess. Right. So see you guys. Right. Trade safe. Stay safe.